Good day, grade 12s. I hope you're having a lovely day so far. Today, we will be looking at the following topics of insurance that we still need to cover, which is the difference between compulsory and non-compulsory insurance, the different types of compulsory insurances, and then finally, the calculation of the average clause, which we spoke about in the previous lesson. So, let's start today's lesson by looking at the difference between compulsory and non-compulsory insurance. Compulsory insurance is required by law. This means that people or businesses are compelled to have this type of insurance, and they are also compelled to pay for this insurance. Whereas non-compulsory insurance is voluntary. This means that people or businesses can choose whether or not to enter into these insurance contracts. The compulsory insurances are usually regulated by the government. These types of insurances do not require any insurance brokers. And this makes sense, or it should make sense to you, because insurance brokers are usually employed by insurance companies, and they are there to entice people to buy their insurance products. So because these insurances are compulsory and people have no choice in terms of whether to pay for these insurances or to choose these insurances, no brokers will be needed, because nobody needs to be enticed to take out these insurance policies. The compulsory insurances have to be taken out and have to be paid for by the relevant individuals or businesses. With non-compulsory insurance, the insured party will usually enter into contracts with an insurance company. So the company will manage and regulate these various contracts that you may enter into. And the company may use brokers who will represent them and sell the products on their behalf. With compulsory insurance, the payment made to these compulsory insurance is paid into a common fund and is paid in the form of a levy. So the money that gets paid to the various compulsory insurance funds is called a levy. Whereas with the non-compulsory insurances, the amount of money that is paid either on a monthly basis or on an annual basis is called a premium. And these premiums must be paid in order to keep your insurance contract valid, so that you can claim in the event that there is a loss that you experience. Examples of compulsory insurances include the Unemployment Insurance Fund, or the UIF, as we will refer to it, the Road Accident Fund or Road Accident Benefit Scheme. Those two terms can be used interchangeably. And then the last one, the Compensation for Occupational Injuries and Diseases Act, which we are used to calling COIDA. So UIF, the Road Accident Fund or Road Accident Benefit Scheme, and COIDA are the three types of compulsory insurances. And these are what we are going to look at in a bit more detail. So let's explore these compulsory insurances in more detail, starting with the UIF. UIF is a compulsory insurance that employed people must contribute towards. The UIF provides benefits to people who have been employed and who have contributed to this fund and who have become unemployed for some reason. This means that if you have contributed to this fund and for some reason you've lost your job, you are able to claim from the Unemployment Insurance Fund. Any employee who works at least 24 hours per month for a particular employee or employer must be registered with the UIF. Employees contribute 1% of their basic income towards this fund. So for example, if I earn 10,000 Rand per month, then 1% of that is 100 Rand. So my contribution will be 100 Rand, which will be paid to the UIF. Businesses also need to contribute an amount equal to 1% of their salaries and wages to the UIF. The business will collect the UIF from all employees and add their contribution, and then make one payment to the UIF on behalf of the business as well as all its employees. Businesses are compelled to register their employees with the UIF as well as make all the necessary payments towards the UIF. So let's see what all the benefits are in the event that you have been employed and that you have been contributing towards this fund, and then you have lost your job for some reason. So let's see when you are able to claim from the UIF. Firstly, we have the unemployment benefit. Any employee who became unemployed may claim from the UIF within 6 months after being unemployed. However, only people who have contributed to this fund may actually claim from it. People who choose to terminate their contract voluntarily may not claim from this fund. So if I am employed and I choose to resign, then I may not claim from the unemployment insurance fund because it was my choice to end my employment, whereas the UIF is there for people who have lost their jobs. The money that I receive from the UIF is non-taxable. So it means that whatever I get from the UIF is the amount that I will be able to spend as my disposable income. Next is the illness benefit. So any employees who fall ill or who cannot work for more than 14 days can claim from the fund provided they have not received any income during that time. So for example, if I fall ill and I have no more sick leave left and I cannot go to work, it means that I'm not going to be paid for that time. I have to take unpaid leave. And if that period is more than 14 days, then I can claim income from the UIF for the income that I lost during that time period. Employees may not claim from the fund if they refuse medical treatment. So if I'm injured and I cannot go to work, but I refuse medical treatment or I don't go and seek medical treatment, then I cannot claim from the UIF. Then we have the maternity benefits. You will remember from our previous term's work that any pregnant employee is entitled to 4 consecutive months of maternity leave. However, the businesses are not compelled to pay the woman during these 4 months. So the only right that the women have is to take 4 months consecutive leave. So pregnant employees who do not receive their regular income during their maternity leave may claim from the UIF for 4 consecutive months. And in the event that an employee has a miscarriage, then they can claim for a period of 6 weeks or 42 days. The next benefit of the UIF is the adoption benefit, and with the adoption benefit there is a stipulation that states that employees can claim from the UIF if they adopt a child that is younger than 2 years old. So if you cannot go to work because you have adopted a child that is 2 years old and you have to look after the child, then you can claim from the UIF. However, only one of the adopted parents may claim from the UIF. The final benefit we'll be looking at is the dependence benefit. So if you have people that depend on you and on your income, and if you die or you become ill, then you can claim from the UIF. So in the event that the dependent dies or passes away, then the spouse or the family of that deceased person can claim from the UIF irrespective of whether they are employed or not. So for example, if I am earning an income and I pass away, then my wife will be able to claim from the UIF for a certain time period, irrespective of whether she is working or not. So she does not have to be in a position where she's either employed or unemployed. That is not relevant in this case because I've passed away and I've contributed to the UIF, therefore she will be able to receive some benefits for that. The next compulsory insurance is the Road Accident Fund or the Road Accident Benefit Scheme. For the Road Accident Fund, we use the abbreviation RAF, and the Road Accident Benefit Scheme has the abbreviation RABS or RABS. So, the Road Accident Fund or RABS insures all road users against the negligence of other road users. So this fund will cover all the road users in South Africa. So this includes the private individuals in their private vehicles as well as people driving for businesses. If any driver who is driving on behalf of a business is in an accident, they are indemnified or exempt from claims made by people that are involved in that accident who are also in their vehicle. The money that is received by the Road Accident Fund or the Road Accident Benefit Scheme is collected based on a levy that is charged on fuel. So this means that every time you fill up your car, a portion of what you are paying for petrol per litre is going towards the Road Accident Fund. The amount that can be claimed for an accident is limited to legislation. So depending on the extent of the accident, that will determine the amount of money that you will be receiving for your claim. If the breadwinner passes away in an accident, the next of kin or a family member can also claim from this fund on their behalf. If any third party is injured or compensated, or any third party will be compensated irrespective of the negligence of the driver. So if you are in an accident, then you will be able to receive a claim from this fund. The last compulsory insurance fund that we'll be looking at is COIDA, or the Compensation for Occupational Injuries and Diseases Act. So we have covered this before in term 1. So the fund covers occupational diseases and injuries that have occurred in the workplace. So compensation is paid, or the compensation that is paid is determined by the degree of disablement in terms of whether the person is temporarily or permanently disabled. All employers are obliged to register with the compensation fund so that employees may be compensated for accidents and diseases sustained in the workplace. Employers are required to report all accidents that occur within 7 days of that accident occurring, and occupational diseases within 14 days of the disease being picked up to the compensation commissioner. Employers are responsible for contributing towards the fund and may not claim the money back from employees or deduct contribution from employers' salaries or wages. This is an expense that must be paid by the business. So the money that's paid to the compensation fund is only paid by the business. Employees do not contribute towards this fund, but may claim from this fund in the event of an injury. So in the event of a death of an employee as a result of a work-related accident or disease, his or her dependents may receive financial support, which means that they can claim from the compensation fund. So I hope you have a clear understanding of the 3 types of compulsory insurances. In our last lesson, we looked at a concept called average clause. And we said that the average clause is the calculation that is done to calculate how much an insured party will receive for their claim in the event that they are underinsured. So this is a calculation that you will need to be able to do. So let's take a look at the formula for average clause, and then we'll take a look at 2 examples where you can see exactly how this calculation works. If you look at the formula for average clause, you will see that the amount that you are insured for is divided by the market value of the item, multiplied by the amount of the damage or the loss that you incurred. So the market value is what the property is worth, and the amount that you are insured for is the damages that you can claim up to. So to remind you about what the average clause is, it's a calculation done when the insured party is underinsured. So we only do this calculation when the insured party is underinsured. Let's take a look at 2 examples of where a insured party is underinsured so that you can have a better understanding of how this calculation works, because it is quite important for you to be able to do this calculation. In example 1, Peter owns a thatch roof house valued at 1 million rand. He insured his house with Pro Cover insurers for 800,000 rand. A fire in the kitchen caused damages totaling 30,000 rand. Calculate the amount that Pro Cover will pay Peter to cover the damages, show all calculations, and explain to Peter what the reason is why he did not qualify for the full damages sustained. So in this example, it's important to know the information. So he owns a thatch house valued at 1 million rand. So that's the market value. That's what the house is worth. But he only insured his house to a maximum value of 800,000 rand. So the moment we insure our property for less than the market value, we are underinsured. So people always think that, like in this example, the damages was only 30,000 rand. However, we are covered for 800,000 rand. So people tend to think that because we have cover up to 800,000 rand, we will receive the full 30,000 rand in damages. But that's not how insurance works. So the moment we are underinsured, we have to do the average clause calculation to see what we are going to receive from the insurance company. So although the value of the claim is 30,000 Rand, we will receive less than 30,000 Rand because we are underinsured. So let's take a look at the first question to see how much ProCover will pay Peter in this example. So the calculation is the amount we are insured for So it's the amount we are insured for divided by the value of the property, or the market value of the property. Multiplied by the claim, or the claim value. So in this example, the amount that the property is insured for is 800,000 Rand, and the amount, the market value of the property is 1 million Rand, and the claim amount is 30,000 Rand because that's the damages that were incurred. So to complete the calculation, we say 800,000 divided by 1 million Rand multiplied by the claim value of 30,000 Rand. And if we work that out, 800,000 divided by 1 million times 30,000, we get an answer of 24,000 Rand. Which means that in this example, ProCover will only pay Peter 24,000 Rand. So even though we have cover up to an amount of 800,000 Rand, that only means that in the event of us losing our entire thatched house, we will get 800,000 Rand. So we do the average clause calculation to see what we are going to receive. So in this case, the damage was 30,000 Rand, but we are only going to receive, or Peter's only going to receive 24,000 Rand for his claim. Then the second question says, explain to Peter the reason why he did not qualify for the damages sustained. And your answer for that question is quite simple. He is underinsured. He did not have sufficient cover for his thatched house which had damages occurring to it. So he was underinsured, he was not adequately insured, therefore he could not get the full claim. So this leaves Peter in a position where if he fixes the kitchen, he will have to contribute 6,000 Rand out of his own pocket to replace all the damages that were done by the fire. Then in example 2, it says Jonathan was in a car accident and his car was written off. So here the property was damaged completely. So the market value of the car was 150,000 Rand, but he had only insured his car for 75,000 Rand with OUTsurance. So it says calculate the amount that OUTsurance will pay Jonathan to cover all the damages and show all your calculations. Now we use the same formula, and in this case the amount that we are insured for is 75,000 Rand, and the value of the car, or the market value of the car or the property, is 150,000 Rand. And because the car was damaged completely, the claim amount is going to be 150,000 Rand, which is the full market value of the vehicle. So let's do the calculation. And we said the calculation is the amount we're insured for divided by the market value of the property multiplied by the claim amount. So the amount we are insured for is 75,000 Rand divided by the market value of the car, which is 150,000 Rand, and the claim amount in this case is going to be the full market value of the car because the car was written off and is damaged completely. So it's 75,000 Rand divided by 150,000 Rand times 150,000 Rand, and Jonathan is going to receive an amount of 75,000 Rand. So although the value of the car was 150,000 Rand, and he was in an accident, so he's lost his car completely, he's only going to be paid 75,000 Rand by insurance or by OUTsurance. So how will this affect Jonathan, which is question number 2? It's going to leave him in a position where he is worse off, because he cannot take that 75,000 Rand and go and replace the car that he just lost. He can't go and buy that same car because he's only got 75,000 Rand, where that car is worth 150,000 Rand. So because he is underinsured and because he was inadequately insured, he is now in a worse position than he was before the accident took place. I hope these examples make sense to you. Grade 12, that brings us to the end of today's lesson. I hope that you have a very clear understanding of the compulsory as well as the non-compulsory insurances, and that you have a clear understanding of the calculation of average clause. These are all very important pieces of information to know. Until next time, keep well and have a lovely day further.